Hi everyone, and welcome back to PCA's Garage. It is Tech Tactics Live episode number 19. Can you believe it? 19. We started Tech Tactics Live, I think it was in April with our first one, sort of an adjustment due to the fact that we couldn't go anywhere. So 2020 has definitely been interesting, and I'm personally happy to say that we're getting ready to close it out and we're going to have a happy new year. And so first and foremost, I want to wish all of you watching tonight a happy new year. Tonight we're going to be talking about diminished value and appraisals. And before I get to introducing our guest tonight, I want to please ask you to be sure to like the video, subscribe, and then comment. And if you're watching this live with us tonight, be sure to put your information in the live chat area so that you can be eligible for our 3 raffle prizes. I figured, you know, we have an extra prize. Usually we have 2, so tonight we have 3. Tonight's episode actually was something we weren't really sure we were going to do, but with your input from the show that we did before Thanksgiving, we had one more Wednesday to go, and here we are talking about diminished value and appraisals. So, without further ado, I want to introduce a close friend of mine. You've probably seen him on some of PCA's valuation panels. You've seen him at PCA events, and it's Dave Kinney from USAppraisals. Dave, how are you?
I'm doing great, Vu. It's great to see you.
And thank you for joining us tonight. Before we get started, I just love to share the agenda with everyone. So maybe we can throw that up there. Tonight, we're going to be talking about key insurance terms. We're going to be talking about appraisals. And we're going to be talking about diminished value. So tonight's discussion isn't a typical tech tactics sort of topic, but I thought it was important because we do these shows normally about maintaining our cars, keeping them up in tip-top shape, and insurance is sort of kind of on the back burner, and we don't think about them much. But when you need insurance, it's pretty important that you understand the type of insurance you have on your vehicle. So that's why I chose that topic for tonight. And Dave not only knows insurance very well, he also knows appraisals. And in fact, we used Dave here. I think we have some footage of our 964 that Dave came out and took a look at the 964 that we have at PCA headquarters. And it was just to make sure that we establish the appropriate value for insurance and for our auditors and such at PCA. So I want to thank him for that. But let's dive right in. Did we already show the raffle prizes? I think we did. So we can dive right into key insurance terms. And let's see if we can throw the list up there. There's a lot of them. Let's see. So collector car insurance. And you can jump right in, Dave, at any time. But for those of you that are driving vehicles that qualify for collector car insurance, it's something for you to consider than your typical car insurance. I think most of us, as we grew up, were added to our parents' policy, and then we kind of, when we became independent, we followed and stayed with that same company, or maybe we shopped it around, but it was sort of like general car insurance. But as we got into Porsches, and Porsches are really unique, Dave, and
Yeah.
normal cars that you insure, you see sort of a depreciation scale, you insure them, and if something happens to them, like it's a pretty straightforward transaction. But why don't you share with our folks like how it's a little different when you're talking about Porsches?
Well, I mean, any collector car, let's start at the 30,000 foot level. Any collector car is different than a regular driver, like, you know, your pickup truck or your everyday daily use car, that, you know, the one that you'll take out on the snowy days, something like that. That shouldn't be what you do with a collector car in most cases. So collector car insurance is a specialty insurance. And I don't care who you buy it from. I have my favorites. I have those that I like better than others. But you should always consider getting collector car insurance, because these are people who understand your car, and the policy is written for the type of use that you're going to give the car. So, you know, here we got, examples of cars that, could be doing track use. So you have to get track insurance. That's different. But in terms of just a regular collector car, I have collector cars, and they're all under a different policy than my driver. The theory is that these people know these cars better and also are familiar with their use and also are familiar with cars that don't depreciate every single time you put 10 miles on it. So that's a big difference right there.
Yeah, and also as we have one viewer here was talking, a JD here was talking about a limitation on mileage, and certainly with collector car insurance, they're not expecting you to drive that, or they don't want you to drive that car as a daily drive. You have another car for that purpose, and your collector car is for shows and the occasional couple thousand miles a year, and that's why they're able to insure you at the appropriate level, but then the rates are very competitive because you're using it much differently than your daily car.
Yeah, and the other thing, not all collector car policies have a mileage restriction, so you have to kind of shop around between them if that's something that concerns you. Obviously, there are times when you're going to take your car, maybe that meets in Colorado or something like that, and you're on the West Coast and you want to drive to Colorado, so you might go over those mileage limits. But that's something that you can have a conversation with the collector car insurance companies, and sometimes it's easy to fix that or go up in your terms of miles or something like that, depending on the company, depending on the state, and depending on what your use is. So don't just say that they all have to be limited to 5,000 miles a year or something like that. A lot of them don't. So that's something you should look into. Another thing to keep in mind is that almost all of them require overnight garaging. So that's a big difference, that your car, is hopefully with you wherever you are and parked somewhere safe overnight. Obviously, when you're on the road, you can't do that. But when you're around the house, for most collector car policies, you just can't put it under that great big oak tree that's just about to lose a limb on top of your 911. So you have to keep that in mind for overnight, even though we know that could happen during the day as well. And so you should be covered with something like that.
So Dave, when we talk collector cars, we have a great, wide variation of what people drive within PCA. Is there and I won't hold you to it because every insurance company is different, but is it 1998? Is it 2000? What's the year or does it all depend?
It's changed so much. I mean, it used to be back in the day, and I do remember back in the day, they wouldn't even talk to you unless your car was 20 or 25 years old. That's completely out the door now. So most of the large companies will eagerly accept your car if it's say a 2015 or even a 2016 or 17, something like that, if it meets the requirements of a collector vehicle and your use meets that of a collector vehicle. So you can't drive your car into work every day with a collector car policy. Those things are all to keep in mind. So it can't be the definition of a daily driver. So I have a 2015 car that's undercover right now with a collector car insurance company. And I'm really, really glad I do, because the brake assembly, the front disc brake assembly on that car cost so much more than the first 5 cars I ever owned combined. We don't even want to talk about it. It's the don't tell my wife if something happens to the ceramic brakes on that car. But the insurance company ostensibly would understand that that's a big difference between that and the F-150 truck that I drive every day.
Well, I'll be honest with you. I haven't shopped collector car insurance for a while. And to know that there are companies out there open to treating a newer model car as a collector car if you fall in the guidelines, that's new to me. And it's, hey, if you're not doing anything this holiday and you want to just kind of shop this depending on how you use your car, you could also not only have better coverage but save a few bucks, right? By putting it under a collector car.
There's so many stories. My favorite, and I'll make it real quick and I'll change the make and model, but a very wealthy individual many years ago had it was actually a Mercedes 300 SL Gullwing, and his windshield was smashed while he was driving it. A rock came through, the windshield got the star in it, the star went all the way up the sides, all that sort of stuff. And he put a claim in with his regular insurance company. And it immediately went to the fraud division because, the insurance company had never heard of anybody having to pay $15,000 for a windshield. But this guy had original German glass. It was the original windshield in his car. And, praise the nice people in Germany. They will make you a brand new windshield with the correct markings in it. It's just that it costs through the nose. And so, this was this one individual's lesson in having collector car insurance, even though a regular standard policy would write it, and that's what it was under.
So let's talk about some insurance terms, because I see Chris Henley here put in a question that falls in line with what I was going to ask next is, what's the difference between agreed value and collector car insurance? And let's hold off on the answer, Dave, and let's go to our list of key insurance terms, because there's a lot of them. We're not going to be able to cover all of them, but we'll kind of, with a broad brush. You can show the full list except for the last bullet, Robert, if you don't mind. Perfect. So you have collector car insurance, which we talked about. You've got actual cash value that you need to understand. You've got stated value, and then you've got agreed guaranteed value. And if I've lost some of you that are listening to this, this is actually pretty important. This is where we're just going to focus on tonight, that you need to really understand what your insurance policy for your Porsche has. And Dave, you want to hit sort of the high notes on each of these?
Yeah. Now, keep in mind that I am not a licensed insurance agent. I don't sell
yes,
insurance.
Neither am I.
And I'm a consumer, okay?
Yes.
But I've had to deal with this in my own work, in the past. So actual cash value allows for depreciation. So you buy a car. We all know the story. You drive it around the block once and it's worth a lot less in a standard everyday car. Like my F-150, I'd hate to think if I got real close to it right now, I could probably listen to it depreciating. But that's different with a lot of collector cars. They don't do that, or they at least don't do that as fast. So, if you're in an accident with that, they might come back to you and they say, well, yes, but you have 18,000 miles on the car and your tires only have, 14% left or 28%. So that becomes a lot more of a discussion. Then we get into stated value, which is a little bit, and let me caveat all of this, insurance differs in every single jurisdiction. So your results are going to vary on this. This is why you have to do the research or talk to your insurance agent and ask exactly what you have. Because, you're in Maryland, I'm in Virginia right now. We could be at each other's house within 45 minutes with no traffic. But the laws in Virginia are different than the laws in Maryland. And if we had to pass through D.C. on our way to visit each other, there would be a separate set of insurance laws. So you have to be aware of all that. And that's really, really important, because all these things differ from different jurisdictions. So that's another thing to keep in mind when you're looking at insurance and shopping insurance. So guaranteed value or agreed value, I'm going to say, is the top of the heap, because I'm making this up. I have a 356A. I say it's worth $150,000, keeping in mind I'm making all of this up. And I have a conversation with my insurance company and they say, yes, it's worth $150,000. So in the event of a total loss or a theft, they pay you $150,000, not $150,000 minus, the tread wear, minus the this, minus the that. It's it. They're insuring your car for a set amount. And so if something happens, that's horrible, that you lose your car for whatever reason, you're going to get a check for $150,000. So there's no argument. There's no discussion. That's what it is. So I would say the other thing to say is, check your policy and see if your car is insured for the correct value. Because, if you were asleep for the last 6 years and your 1973 911 has gone from being kind of a used car into a super duper collector car that's ultra desirable because of the builds, the number of builds, the options, the condition, the mileage, all those sorts of things. Make sure you're not underinsured, and that's a big problem. So, literally for the cost of a good night's, dinner for the two, you and your wife, you and your spouse, whatever, it could be easily insured for a lot more money. So don't save on that. Don't say, well, I think my car is only worth $45,000. when to replace it would cost you $100,000. That's being penny wise and pound foolish. And that extra $50,000 in coverage might be, like I said, you could spend it on a dinner and a bottle of wine sometimes. So
Yeah,
keep that in mind.
That's so important, and I think that's where we're pretty fortunate with the brand that we love, with Porsches, and how their values have gone. Like when you were talking about that, I was thinking of one of my local members. I believe he has a 83 911, and it's a beautiful car, and that car's value 10 years ago, it's much different from today. And if he hasn't looked at the price of what cars are going for and hasn't adjusted his policy when he bought that policy, who knows when, and something, hopefully nothing happens, but should something happen, you want to make sure that the policy reflects today's value as opposed to when he bought it and when he first bought the insurance policy.
Yeah, you become the co-insurer, and you don't want to be in the insurance business yourself. So, in the horrible, worst case scenario, you've got a $150,000 car that you got $50,000 worth of insurance on, and there's $75,000 worth of damage. You're going to get a check for $50,000, and that's it.
Yeah.
And so then you're responsible for that other $25,000 worth of damage, because they're not going to total the car because now it's worth $150,000, but they might give you options. And like I said, your results may vary. I just have seen from my appraisal business, I've seen that, that guy who's, the frugal guy who spends the most, and that has happened. It's so, I mean, you don't have to be up to the minute. And you don't have to be like, I'd say if you're within 10% either side, even 15%, you'll probably be fine.
Well, but, Dave, I'm actually going to throw you under the bus, and I'm just going to tell my wife when she catches me viewing, looking at all the car listings on the Mart or in the auctions. I'm just saying, well, Dave told me that I have to make sure I understand the market of my car, or our car, so that we have the proper level of insurance on our cars. That's the whole reason why I'm not shopping. I'm just doing research.
Yeah, that's what I call it too. As a publisher of a price guide, that what I have to do is keep up with market trends. And I'll spend the entire Sunday, if I'm here at my office, from noon until 6 o'clock. And my wife will say, "What did you do?" And I said, "I looked at cars that are for sale." And she's like, "How can you do that?" I said, "There's nothing more interesting than seeing cars that are being bought and sold, and watching auctions, and going to bring a trailer and all that sort of stuff." Yeah. That's what I do. That's what I do.
I think a lot of us watching, that's what we do. We're all guilty of that. Here's an interesting question, and you might not know the answer. It's from Lance Johnston. Can you put a track day insurance on a car under a collector car policy? Again, I'm not an expert, and you are not, but I believe so, because let me just say that I know a car that's under collector car insurance, and it has been used for DE events, and there are, when that person went on a DE, they got track day insurance for that car. So in my not professional opinion, I think that you can. What do you think?
I know that a number of the collector car insurance companies write specific track day policies. And I know that there's a broad use policy that some people have that is like 6 events a year, or you can do one individual event. So check with your provider. These people they're paid to talk to you and be friendly. So, make them do a little work at the call center and find out who you're comfortable with as well. Yeah. I think it's really about your comfort level with the insurance company, and that's really important. I get to see the bad news stuff in the appraisal business, and so many of these things could have been avoided by people being a lot more proactive.
Yeah, and that question was actually pretty good, because it leads into our last insurance term, and that was track insurance. And for those of you, whether you have a collector car or if it's your daily driver that you take out on the track, a lot of our partners offer track-specific insurance, and I can't tell you how much I think it is important. In fact, I have a very close friend and a few PCA members that have taken their car out. Although driver's education is one of the safest things that you can do, but on occasion things happen, right? And if you have track insurance and you have an incident with your car, like that policy is specific to that incident and it's completely separate from your collector car insurance or from your normal daily driver insurance. So it's nice to have and know that what happens at the track is not going to affect sort of the rest of your policy and so on and so forth.
Yeah, I mean, it's all about risk with the insurance companies, and they know what the risk is. And I can't imagine somebody take their valuable car on the track without track insurance. I mean, I get it. There's beater races, and sometimes it's fun to take out the rusty old whatever and swing it around the track one time or something like that. But if you're going to drive your car in anger or anything close to it, for goodness sake, get a track insurance policy. And once again, the cost, an expensive dinner out, maybe something like that. But if you did $38,000 worth of damage to your car or something like that, you would, it would be like winning the lottery compared to, forgetting to get that done. So
yeah, and it's funny. Sometimes you see people spend all sorts of stuff on their car when they go to the track. Get sticky tires, new suspension, to get all this stuff, and then they forget to get track insurance. And I'm just shaking my head, going, you need to think that one through.
And don't think the insurance companies don't know what those roundels on the side of your car and those sticky tires and everything else mean. When it's in our area, maybe when my car got in an accident on the road half a mile from Summit Point.
Yeah, exactly.
You probably didn't. So
they're pretty smart. A quick question from Infinite 1871. What if you want to daily drive your classic Porsche? What is best is it's technically not a collector car, and unfortunately, again, you can ask, and you should ask all the different insurance providers. But I believe if you're driving it as a daily driver, again, it has to do with odds and actuaries figure out what the probabilities are. If you're driving it daily, then I don't believe it's going to qualify for a collector car policy.
Yeah, make the phone call. Like I said, I don't sell insurance. I don't have anything to do with it. I'm only a consumer, but it doesn't cost anything to pick up the phone call or, get online with one of the companies and ask the question. The answer is probably going to be no, but they might have a product they can offer you. Yep. I don't know. So, they might, there might be some sort of blend that you can get involved in. This business has grown so much that, things change on a every 6 month basis. So the answer that you got 6 months ago might be different than the answer that you get today.
Yeah, and I will recognize there are some people here on the live chat talking about there's plenty of cars that go on track without track insurance, and I totally get it. I'm not trying to make fun of those people or anything like that. It's about your comfort in terms of, if something happens, will you be covered? And yeah, there are a lot of cars that go out on track with PCA, and we do run, as I said earlier, very safe events, but it's kind of like your own car insurance, right? Like, how often do you actually need your car insurance, but you have it there when something unexpected happens? So again, when you're talking about cars that possibly are in six figures and collectors, to me, I think it's a great idea, but certainly it's up to you to figure out, what's your risk level. So we could probably talk insurance for another hour, but we've got two other topics, and I think we have the raffle winners coming soon. So they're tallying it up. Okay, no problem. So let's talk about appraisals. I mentioned earlier that Dave came out and took a look at our 964 because we needed it for our auditors and for insurance purposes and such. And so that was a very specific need. And he's been around. He's been at many of our events, and he was the first person I thought of. So what about appraisals? I'll just ask you, Dave. Like why do people call you? And then we'll talk about, like, how do you find someone that's reputable? And then maybe if you can share with us sort of a range of, the services and the service costs for people doing appraisals. So when, how, and how much?
Okay. The when is kind of funny because appraisals usually get done when there's some sort of transition. So it's death. I do a lot of estate work, for example. It's divorce, always fun. It's somebody bought a new car or is thinking of selling their car. I never get a call from somebody who says, I've owned this car for 15 years and I'm planning on owning it for another 15 years and I think I should get it valued. And of course, now, my other caveat is that you don't ask the barber if you need a haircut because the answer is always going to be, of course you do, even for bald guys like me. So, be real, do you really need it? I mean, that's one of the things. Does your insurance company require it? Probably not, but in some cases they do. So, all those things come into play. You just did a screenshot of my in my appraisal business, and in terms of charges, our basic starting charge is $575. But don't try and give me a lightweight RS and expect it to get done for that kind of money. So race cars are more expensive. Cars that have been modified can be more expensive. And this is, for your basic fair market value appraisal. So it starts there and goes up. I will say that my prices are going up at the first of the year. And mine are probably high to mid end of the pack. There are still people without any qualifications who do them for $99. They don't hold up, generally speaking. I'm sure that you buy the credentials as much as you buy the appraiser himself. So I would say look for credentials and not from a self-credentialing group. There are a number of automotive appraisal companies that are out there that are self. They have their members and they pay to become certified with that group. I would look into it. I'm a member of American Society of Appraisers. It's the largest of the multidisciplinary appraisal groups. So we have people who do teacups, and we have people who do moon rocks, and we have people who do cars. I'm in the automotive specialty side of that, so that's what I do. And if you're looking for somebody, there's a good chance I can refer you to somebody who's closer than I am. I have a pretty good group of people that I work with around the country. So if you wanted to just email me, don't expect an immediate answer because this is the type of thing I usually have to answer on a Saturday afternoon or a Sunday, something like that. But I might be able to recommend somebody, closer to where you are. It gets real expensive with travel, especially for one car. Because if I or anybody else has to travel and spend the day in the car going to look at a car and then come back, that's a full day out of the office, and so I have to charge for travel. A lot of the times when we do multiple cars, the cost of travel gets absorbed in it or goes down. So it's kind of a flexible thing. I would be real comfortable with the appraiser's credentials before I would be comfortable with knowing about your car. And that's really important. I get calls all the time from people who say, and I'll just throw Corvettes under the bus because I was just looking across the room at a 143rd scale Corvette that's over there. And they say, well, what do you know about 63 Corvettes? And I will tell them if they want to, I will go into what I know about it, but that's not the important part. I'm a value guy. I'm not just a car guy. That's how I started out. And I have to learn about the different value characteristics of your car. But most importantly is that I know, how to do an appraisal, how to, work with appraisal terms, and how to get something that's a good document for when you're going to need it. And that includes going to the bank for a loan or going to court or whatever that purpose is.
And the report that you provided back to us for the 964, I think that's where I was most impressed. Like, I knew you had the general knowledge of a 964, and we talked about it over the phone. And honestly, in the video that we did, I was kind of your eyes and showed you a lot of it. But that wasn't really, to me, the value of what you brought to the report. It was all sort of like the research and the documentation that you provided as part of that report that was good. So I would say to folks that are looking for appraisers is, much like a PPI, you're buying the person that's doing it and their reputation, and should something in legal terms that happens, like you've went with somebody that's got your back. Again, same thing with a PPI. Like anybody can kind of lift and look around and poke here and there, but you want someone that knows the model, someone that can understand where to get the information on that model, give a fulsome report, because that's going to be worth more, right, at the end of the day. And that's why some people do it for $99 and others that do it for more. And I can tell you, a good PPI definitely can save you money long term, so because you avoided buying a headache or something. And I think same thing with appraisals is making sure that you have the documentation, the records with the car, and finding people that have been around our community also is a good idea as well. I think we have our winners. So let me just break real quickly. And I think these are some repeat winners. So congratulations to a few of you. Gary Glover won, Chris Henley and Chris C. Congratulations to all of you. And we will get those out to you sometime next week. And depending on deliveries, it'll get there when it gets there. But you will get it.
Sometime next year. Boy,
next year.
We've been dealing with some the delivery issues here at my office.
Same here.
Oh man, is it bad?
I did get you a Christmas present. It's just not here yet.
Right, exactly. Enjoy it in 2021, right? I was just gonna say that I couldn't agree more with what you said about PPIs. Listen, I am not qualified to do a PPI on many cars, so I've just stopped doing them altogether. Look, I can do a PPI in a '65 Mustang, with blindfold on, no problem. But when I started this business, it was 30 years ago this year. And in 30 years, think about what's happened. I mean, the cars that I was looking at back then were from the 60s and 70s. And, everything's changed. And my technical skills are not up to date in terms of, of knowing all the answers to all those questions. So that's why I stopped doing them. I just, I would do it for friends. And now I will say, I'll go in and give you a value, but send your guy out who's qualified to do a PPI before I get there.
Now, what about, let's think about appraisals from like the consumer side. So let's say I saw that 914 earlier. What if I'm looking at a 914 and the seller's like, hey, I have this appraisal documentation from so-and-so. As a consumer, I get a copy of that. Like, what should I do? Because, what do I do?
If it starts out with the term "to whom it may concern," find your closest shredder and put it right in there, because that's what it's worth. I mean, and I will say that appraisals have changed in those 30 years as well. Use it as part of the history. Just like you might say a repair. Somebody did a brake job on that 1970s car in 1989. It's a historical record, and that's all it is, unless it's up to date. And then, I can't, if somebody sees one of my old appraisals and they say, I want to talk to you about this car and what you saw 2 years ago, the first thing I have to say is, fine, talk to the owner or the former owner and let him know that you'd like to do that. I need to get an email from him at the very least. I won't even take a phone call at this point to talk about that car, because everything that I do is confidential. So until I get a release from the person who owns that document, and in some cases, the person has passed on or something like that, and I say, listen, my only choice is to do it again, even though the car has only 1,300 more miles on it or something like that, because we work to very strict confidentiality, and believe me, that protects everybody. Think about that big D word I said, divorce. If the husband gets it, or mostly I get hired by wives, guys. I hate to tell you, but all that stuff about the value of the car being worth much less than when you bought it. The wife wants to verify that. So that sort of question comes into mind.
That's pretty interesting.
Yeah, and it won't be revealed until you get to court too. So, I mean, and I've had people who called me about, this happened just a couple of months ago. I did a diminished value for an insurance company, a regular lines insurance company, not a collector car insurance company. And the guy who had the car should have had collector car insurance. And it was about diminished value. And so he had his other appraiser call me and say, hey, I hit this car at this. What did you hit it at? And immediately I'm like, well, I can't tell you because, there's two ways I can get that. The insurance company who I was working for can release the document. Or if it winds up in court, then he'll be able to see exactly what I did. So, always keep that in mind.
Wow. So can I put you on the spot, and
Sure.
can you share with protecting the innocent, protecting the names and all that kind of stuff, where you were called upon as an appraiser and how you either helped the person. We're going to talk about diminished value here in a second, but like your role, like, did you go to court? I think someone on the live chat here is like, when they hire you as appraiser, do you actually go to court for them? Like, I don't know.
Yeah, and that costs a lot of money, lot of money, like about $1,500 for a half a day.
Yeah.
So, I mean, it gets very, very expensive. And that's the next part of our discussion when we're talking about diminished value. We'll get into that. But yeah, I've had lots of times where, I've received a few bottles of very expensive wine because, this was a question where the insurance company, and I guess every single time I can say this with very rare exceptions, it was a regular lines insurance company, just didn't understand what they had undercover. So, there's the shame on you part of that because the guy should have had that car appraised by somebody, and he should have sent that document in at the very least to his agent to tell him to make this part of the permanent record. I did have one. It was an XKE. The guy was taking it out on a fun run, not an official event, and he just spent a lot of money having the car done. And he had the car insured for $54,000, something like that. And he asked me to insure it before he went out on this run. And he, like I said, the car had appreciated and there was a value difference, but he'd also spent a ton of money. And the car came in approximately $150,000 at that point. And I said, listen, you're taking this out on Sunday. And this was back in the day, I said, fax this to your agent and tell them you want to have your coverage increased to $150,000. And this was like on a Wednesday, something like that, because he called me, and it takes time to get these things done. A lot of times, sometimes we're slow, but we're slow a lot of the time, I guess would be our motto. The methodical part always comes into that. Anyhow, he had the car insured for $150,000, no problem. Got the binder back on Friday or got the confirmation. And on Sunday, guess what? He ran off the road and went into a mud bank and did about $75,000 to $85,000 worth of damage to his car. Now, keep in mind, in E-Type, think about that front end. Once that front end is hit, it's a major chore to get that thing. That's a Humpty Dumpty that's really tough to put back together again.
Yeah.
And so, he wasn't as appreciative as he should have been. He thought of it as this kind of like, oh, that's the way it works. And I'm like, dude, had you not made the phone call, had we not connected the dots,
you saved his bacon.
Your car would be totaled, and then it would go to to an auction at one of these, Copar's the one we all know of, at Copar. And his wrecked car probably would have sold for $65,000 at that point because he just spent a lot of money on it. So
that's
the insurance company would have made $5,000 on it, right?
Yeah. Well, I have a friend. He's probably watching where the weekend before we went out on track, and I, pretty, insisted that he get track insurance, and he was chasing a Ferrari, and unfortunately ran out of talent at the wall. But thank goodness he had track insurance, because all is good now. And he's going to kill me for sharing that story live. But oh well, that's what happens when you're friends with Vu. But let's talk about diminished value, because that's one I think that people have heard about but don't really understand it and don't know how to, what's the importance of it and how to fight for it. And so let me just kind of set the stage, and then you can fill in everyone on it. So let's say you're driving your car, your Porsche. And again, we're very fortunate where our Porsches are unique in terms of their staying power, in terms of value. But then also, part of that is when you go to sell your Porsche, people that are typically buying Porsches are also very thorough, right? So let's say you're driving your 911, you pick year, and it gets rear-ended, right? Totally not your fault. Or here in this case, this Panamera gets sideswiped by something. Now, it's not too bad, that 993 I think you're looking at there, that Boxster. So you can get it repaired. That's not the problem. But now that you've repaired the car, and let's say they even do an immaculate job, you can't tell, they blended the paint, whatever, it all matches, blah, 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 blah. But when you go to sell that car, now with like Carfax, especially, your car now has a record that it's been in an accident. So even though it may have been repaired perfectly by a top-notch company, buyers, when they look at your car, they go, that car isn't going to be worth as much as a car that wasn't hit, right? So that's what we're talking about, I believe, the diminished value. And so when that happens, and you might not be, you're just happy that that fender got fixed and your car looks good, but 10 years down the road, when you go to sell it, you're going to go, ooh, I wonder if I should have fought for diminished value. So that's my question to you, Dave, is everyone that's watching now, hopefully you're not worried about diminished value, and that's why you're learning about today, but something that you should be thinking about so that should it happen, you're not doing it under stress. You know what to do. You've prepared for the incident, so to speak. So Dave, what do you want to share with folks about diminished value?
Well, I'm glad we have another 2.5 hours here, because that's
you've got about 15 minutes, 20 minutes.
That's probably what it's going to take. But I'll give you the overview. So diminished value you explained it, but I'll put it in the simplest terms. You're going to look at a 2018 Porsche. Let's say it's a late model SUV. So, name your favorite one. And you want to buy it, and you are presented with two cars, exact same options, very, very similar miles. Both of them were used by a PCA member. Fantastic. I mean, that's what you want. You want that PCA badge on the back of that car so many times. I tell people that if it says, that the guy's a pilot and it's a PCA, that's the car you want to buy.
Absolutely.
But yeah, right, exactly. So, don't forget, when you buy a used car, you're also buying that owner. So, and that's real important. Anyhow, one of them had a bumper cover that was ripped off, and in a small accident. And the other one is completely untouched. You can run a paint meter on it and it's all perfect. It all comes up the same numbers everywhere, or, within the correct tolerances. Well, they're both the same money. Which one are you going to buy? Okay, now take that bumper cover and make it into a T-bone accident on the left-hand side. Even if the car was excellently repaired by the best shop using all Porsche parts, it's still worth less to most people, myself included, because it's had that history, it's had that action. So that's where diminished value comes from. So moving on to, appraisers offer opinions. Keep in mind that, we don't determine value, we give a opinion of value, and that's a really important thing to remember. So when I'm asked to do a diminished value, I'll take a whole bunch of things into account. Where the car was hit. So a rear engine car hit in the rear responds differently from a front engine car hit in the rear. Why is that? Because it's more complicated. All of a sudden you've got a lot of major mechanicals involved. You're always going to have mechanical parts, but is it a car that's built on a frame like so many old cars were, or is it a unibody car? That makes a big difference, because each part of that unibody, you can make the argument that that's all part of the structure. So that door, that windshield is part of the unibody structure when it comes right down to it. So what's your level of comfort in accepting that sort of thing? I will say here, my caveat right in the middle is if you're just looking for a driver and you want a car that you can take out on the track, look for one with a bad Carfax that had that bumper ripped off. I mean, that's perfect because there are a whole bunch of people who won't buy it because it's got that bad Carfax, but it might be something that you want because you've seen that damage has been repaired and done really well. And basically it was a bumper cover, guys. I mean, it does happen. So, so diminished value, if you're not and once again, state laws rule, and there's always differences in state laws. So you might want to call your brother-in-law the worthless attorney and make him pay for that big Christmas dinner that you had him over for, hopefully not this year, but last year and next year. I guess the best thing is you've got to check your local laws and see, what the laws are for diminished value. You're not going to get diminished value from a tree. You're not going to get it from a deer. You're not going to get it if you drove your car into the wall yourself. But what you can get it is when you're the third party, when you're the one who was hit. So I've done a lot of diminished values. Now a lot of the insurance companies have a model that they use. And guess what? It gets you just close enough that you don't want to hire somebody like me and you don't want to go to court most of the time. But I've seen it egregious in both directions. I've seen companies that have rolled over and played, oh, that's in Monterey. I know that intersection right there.
Yeah, that photo caught my eye.
That's the DoubleTree Hotel. Been there many, many times when I'm out at Pebble Beach. Now it used to be the DoubleTree. Now it's an independent motel. Anyhow, back to where I was. A lot of the times the insurance companies will use a model for this. Once again, if I'm hired to go look at that by the owner or by an insurance company, you as the owner have rights to that document. But if I'm hired by the insurance company, they can use that as a negotiating tool. Let's say I come up with a $90,000 diminished value on a $250,000 car, just pulling this straight out of the air. And the insurance company comes up with $45,000. Well, then you got a big fight on your hand. But if they come up with $80,000 and they want to pay you the diminished value of $80,000 and I come up with $90,000, then you're in that kind of gray area where is it worth the fight? I hate to say that because that's 10 grand and that's a lot of money. So let's make that more like 5 grand. They pay you 85 and I say it's 90. It's probably not worth the fight. Oh. And you can extrapolate from that, how far back when the numbers go down, the cost of going to court, all that sort of stuff makes a big, big difference. So
yeah. Can I interrupt you?
Sure.
First, just a quick comment. Earlier when we were talking about Carfax and such, and trust me, I know there's a lot of car accidents and repairs that aren't reported on Carfax too. So you definitely need to watch out and do your due diligence with these PPIs or whatever, and making sure that you understand, what you're getting into in terms of the car. If your car was repaired and not reported to Carfax, it's still important for you to know that, about diminished value. And then just jokingly, I know you were talking about attorneys and JD chimed in about stop bashing the attorneys. Don't worry, JD. We love attorneys too. In fact, my wife is one. We're just joking around.
My dad was, and my brother is. So we're cool.
We're just messing around. But so when it comes to fighting for diminished value, is that something like as just an individual who owns a car that got rear-ended, is that something that I can go and fight, or is this something where I have to hire someone to fight for me, I guess is the question.
I would say you could do a lot of the work yourself. I try and stay out of those things as much as I can because it's, when you're talking about, two people butting heads, sometimes it's just a no-win situation. Everybody leaves unhappy. Mm. So, I mean, like I said, appraisers offer opinions of value. Even among appraisers will have a difference. So, all those things, come to bear. But, hopefully if you have a diminished value claim, you can ask your insurance company to do a diminished value on it, and they can send a professional out. Maybe somebody who is, completely not an independent like me, but somebody who is an in-house appraiser. They, and there's another term, I'm an appraiser. They use adjusters and call them appraisers sometimes. So it's all kind of regional and statewide differences. Yes, I mean, I urge anybody to be their own advocate, because it's a lot cheaper when they do the legwork. But they can call somebody like myself and ask them the questions and say, is this worth it? Now, diminished value responds mostly to newer cars. So if you have a 2001 Porsche that hasn't been completely recently restored, you're probably not going to get diminished value. But if you have that 2019 Cayenne, and it's in an accident, and somebody who's in the midst of being over or had been overserved runs into the back of your car at the restaurant parking lot or something similar to that, you've got a claim for diminished value, and it's a big deal, and it can be a lot of money. The diminished value is usually worked on for the cost to cure, how much that repair cost. Mm-hmm. So it would be a percentage of that $19,000 repair. And that percentage can, in some cases, include 110 or 120 or 150% of that $19,000 repair. On a Honda Civic, that ain't going to happen. But on a specialty Porsche, something limited production, you've got an RS or something like that, it can make a big difference. So, I urge you.
Let me throw out a scenario to you, because I'm a huge 356 fan, and I hope to have a 64 someday. But I'm in a 356 64C, driving down the road, gets bumped. It was originally non-hit, all original numbers matching, and now it's in an accident that requires a rear clip or something like that. I would assume that is an instant where I'm going to be fighting for diminished value, because the value of a 356C that has been not hit versus one that's hit, that's a pretty significant difference in value.
Yeah, and thanks for calling me out on that, because all original cars, that diminished value should be thought of as a factor. You can never have it original again. So if you have a no paint 356C, a car, even if the paint is faded and everything else, it can never be that again. You can never put that Humpty Dumpty back together again completely. So, yes, but you better be dealing with a collector car insurance company at that point. And even though you were hit by somebody who has an insurance company, here, we'll throw another one under the bus, that is a jurisdiction and an agricultural resource. How's that? We'll use that instead of saying whatever company.
Yeah.
Or the ones that as Jay Leno says, they said they have good hands, but they've only shown me one finger so far. So I'm
Dave,
quoting Jay Leno.
Don't you get me in trouble, Dave.
Yeah. Anyhow, I'm quoting Jay Leno. But anyhow, go to your insurance company, even though you were hit by somebody with another insurance company, because make them fight that for you.
That's what I was going to ask you, is do you fight with the other person's insurance, or do you work with your own? So work with your own and let them fight the fight.
I've had to hold so many hands in my career and say, yes, okay, that is now on your permanent record. Have you had other accidents? And they say, no. And I said, well, we've just proven that you're a human, and that your car got hit by somebody else. Go to your insurance company, tell them about it, and have them fight the fight. They know how to do that. It's called subrogation. They can go to that other company and say, we're paying this guy, making up another figure, $20,000, and you're going to pay for it at the end of the year. And they say, well, you know what, we have one that we're paying for, and you're going to pay for that at the end of the year. And that's what basically that whole thing is, that they work it out amongst themselves. And let them do it. That's what you're paying them to do. That's one of the things that you're paying the insurance company to do.
So
that's sad to see.
I mean, I guess the other question that I think someone mentioned on the live chat is, again, same scenario, you get into the accident, and then you believe that there's a diminished value that you need to fight for. If you insist that upon your insurance company, do you run the risk of that increasing your policy with them?
Well, anything's possible. So I will say, generally speaking, yeah. But I mean, okay. So don't run to your insurance company. The Dave Kinney rule is if somebody, a parking lot thing on my F-150, I've got a bumper, there's a scratch on it, I don't know where it came from, I know it wasn't me. I am not going to call my insurance company and say, oh my God, I have diminished value. Oh my goodness, this is going to cost over $400 to repair.
Your cream puff F-150 is no longer a cream puff.
Yeah. We call them trucks for a reason, because we use them to haul stuff in. Okay. But, so, I mean, keep all that in mind, but wait until it counts, I would say. If you're comfortable, taking the hit and saying, okay, this is going to cost me $400 or $300 or $200, I would not go running to my insurance company, no matter who it is, for that, because it's just a nuisance, and that, once again, goes on the permanent record. So, but wait until you need it. But when you need it, definitely, use that resource 100%. I mean, this is me saying as an appraiser guy. This is not, I don't sell insurance. I'm not involved in insurance. I am totally unqualified from anything other than the consumer, standpoint to talk about it. I will say, though, with diminished values, once again, look for somebody with good qualifications, because that's going to count. And do not have it done by somebody remotely. There are a number of companies that will say, we'll do your diminished value for you, and they come up with, your car was hit and it's a 7-year-old, I'll go ahead and do Boxster again. It's a 7-year-old Boxster with 130,000 miles on it, or something like that, and they come up with some ridiculous, $9,000 diminished value on a $3,000 hit. It ain't going to hold up, and the insurance company is not going to pay that. So don't use one of these mail order companies. I highly recommend against it. Let's put it that way. That's something that I would say. There are a number of them out there, but it's best to have somebody who can physically look at the car. Like I said, if I can't look at the car, generally speaking, I'll find somebody who can in my area even, or, somewhere else, somebody who's in my mind qualified. And then, it's your job to get on the phone, or, to get, find their website and check them out and see if they're going to be a good match for you.
So I have a question from a local here, Chris Scott. He talks or wrote in about diminished value in terms of percentage. Is there a percentage? I'm sure every car is unique, and every situation can be unique, but are we talking about diminished value can be 5%, 10%, 25%?
I like to think of it as and like I said, there is no such thing as the same accident. You can't. Right. I mean, even if we tried, if we had two cars with the same miles, we could not recreate the same accident. So everything is different. The old timers would tell you, and I'm not saying this holds true anymore, but the old timers would tell you it was 30% of the cost to cure. So in other words, if it was, and I shouldn't be saying this in public, and I just did, but if it was $10,000, then it would be a $3,300, to repair. 10,000 repair, $3,300. But it's all different. It's all changed. It could be much more than that, or it could be less. So, but that's what the old timers would say, that it was a third of the cost to cure. And then again, those were the same old timers who, would tell you that you had to replace your tires every 1,500 miles, because that's all, those cord, those polyglass cord tires would only last, 10,000 miles if you got really, really lucky. So that's how much things have changed. So, do not quote me on that. Do not say, but he said it's 30%. It's not, because it always changes.
And in fact, everything that you've heard about tonight is just Dave and I, just chit-chatting. Nothing's official. We're not experts. I'm going to throw up here some of our partners, and if you want more details, I encourage you to call them and call your own insurance company to get the details and make sure that you truly understand what coverage you have on your car, because it'll be so important to know that now when you're not under stress because of an incident. And unfortunately sometimes things happen, and if we've helped you prepare for that, that's the whole reason why we do this show. And look at that, we are already at the top of the hour. I knew it was going to go so quickly. Just want to remind everyone, please, if you would, like, subscribe, and comment. I hope you've enjoyed the 19 episodes that we've brought to you this year. We are looking to doing it in 2021 if you all think that it's worthwhile. In fact, you might even, if you have some topics that you would like for us to cover, feel free to put it in the comment section or in the live chat because I review it all. And I want to say goodbye to 2020. I want to wish everybody to stay healthy, stay safe, and I look forward to soon being able to be with some of you all at PCA events. And until then, we'll see you at episode 20. Dave, thank you very much.
My pleasure. Thank you very much, Phil. Take care.